You know, when you stare at a screen showing numbers just rapidly flashing red and green all day, it usually feels a bit like looking at an EKG of a patient having a heart attack.
Oh, yeah, totally. To the untrained eye, it's just jagged lines.
Yeah.
Panic, just pure chaos.
Right. But if you step inside the VIP trading floor at MyCryptoParadise, our master trader Simon looks at that exact same chaotic monitor and, well, he actually sees a rhythm.
He really does. It's fascinating.
So, welcome to a very special edition of Bitcoin Deep Dives by MyCryptoParadise. We're going behind the curtain today, unpacking an incredible, completely unfiltered market breakdown from Simon, straight from the Paradise Team vault.
Yeah, it's honestly a rare look into how a professional actually processes real-time data. I mean, Simon recently mapped out the entire market structure.
He went deep into it.
He did, diving into everything from liquidity clustering to time frame divergence on sentiment indicators. But we aren't just going to sit here and list off price targets today.
No, absolutely not. The true mission of this deep dive is, well, it's much bigger than that. We are extracting the behavioral science beneath those charts.
The human element.
Exactly, the psychology. We want to expose the vital, undeniable mechanics that separate a professional trader's mindset from a gambler's mindset. Because in the crypto space, letting that line blur is really what destroys portfolios.
It absolutely wipes people out.
Okay, let's unpack this. By the end of our time together today, you are going to understand the data signatures of retail panic. You'll see why most people inevitably bleed out their capital over the long run, and most importantly, how you can fortify your portfolio just like a MyCryptoParadise Pro.
Yeah, and to even begin talking about trader psychology, we have to reconstruct how you view the market in the first place.
Right.
Because if you look at Bitcoin and see a slot machine, your brain will just mechanically default to casino behavior. You'll chase dopamine.
We'll just be pulling the lever over and over.
Exactly. But Simon completely shatters that view. He introduces this framework of the market as a breathing organism. It's not random. It's actually physiological.
Wait, I have to challenge Simon's phrasing here for a second.
Oh, go for it.
Well, calling it a breathing organism makes it sound, I don't know, incredibly peaceful and natural.
Like a yoga class or something.
Right. But let's be real. When my portfolio drops 20% in an hour because of some random macroeconomic trigger, it doesn't feel like a natural exhale. It feels like a targeted, violent attack. How do you reconcile that?
Yeah, I get that. And that's the exact cognitive dissonance retail traders face every day. I mean, it feels like an attack because our human neurology is hardwired to process a sudden loss of resources as a literal threat to survival.
Wow, okay.
Yeah, your amygdala fires, cortisol floods your system, and you just panic. But let's look at the actual mechanics of what Simon is tracking here.
Okay.
He uses an Elliott wave framework, which maps out market cycles in a specific sequence of 5 waves.
Yeah.
The impulses, so the aggressive moves upward, those are the inhales.
Okay, that tracks.
Right. And the consolidations, the corrections, like those violent dips you just mentioned, those are the exhales. The market absolutely has to exhale to gather the liquidity required for the next inhale. It just cannot breathe in forever.
I see. So when a retail trader sees a massive red candle and their heart rate spikes, they are essentially projecting their own biological panic onto what is simply the market's mechanical exhalation.
Precisely. You nailed it. And this is really where Simon's concept of building a house comes into play.
The building a house analogy. Yeah.
Right. It's not just a generic metaphor about, having a good foundation. He's talking about building a structural, mathematical baseline of data points to defend against your own psychology.
Oh, that's interesting. Defending against yourself.
Exactly. You lay down your Elliott wave, counts as the foundation. You look for a decline in trading volume during a drop to confirm it's just a corrective exhale, not a trend reversal. And those are your walls.
And then the risk parameters.
Yeah, you map out your risk parameters, and that's your roof. You are mathematically increasing your probabilities layer by layer.
I see. So when the storm hits, when that 20% drop happens, you aren't standing out in the rain panicking.
No, not at all.
You are inside a mathematical structure you built beforehand. That completely changes your relationship to the screen. You just stop taking the red candles personally.
Exactly. You step out of the emotional reaction and into pure observation. A professional doesn't have a crystal ball.
Yeah.
They just use this structural baseline to locate where the market is in its current breath cycle. They protect their capital while everyone else is suffocating.
But, okay, understanding that the market breathes is really only half the battle, right? because if it's a predictable rhythm, the obvious question is, why are 90% of retail traders still out there suffocating?
Right. Why do they keep losing?
Yeah, the answer has to lie in who they are trading against. And that brings us to the actual mechanics of the order book.
Yeah, we have to look at the human biases that distort the market's breathing. And Simon points to a really specific metric to gauge this, the fear and greed index.
Ah, yes, the classic fear and greed.
But he's not just looking at the daily aggregate like a casual observer. He's actively hunting for time frame divergence.
This was a brilliant tactical insight in the breakdown because Simon points out that the daily time frame might show an index of 50, which is totally neutral. The broader market looks completely fine.
Yeah, nothing to worry about on the daily.
Right. But when you zoom into the 1 hour time frame, the index drops to what he calls the magical number 20, extreme fear. So let's dig into the why here. Why is a localized 1 hour reading of 20 so significant?
Because the number 20 on a short time frame is basically the data signature of localized retail capitulation. It tells you exactly what the herd is doing right at that specific second.
Wow.
Yeah, let's walk through the mechanics. When retail traders are gripped by fear on a short time frame, their cognitive biases, specifically loss aversion, convince them the sky is falling.
They just panic.
Yeah, they don't look at the macro structure. They just stare at the red candle. So they smash the sell button right when the price is hitting a historically strong support level. They're selling at a loss just to make the psychological pain stop.
And meanwhile, what is smart money doing? Because if you look at the on-chain data and the order book depth, you can see the massive algorithmic whales quietly stepping in.
They're just waiting.
Right. They are setting limit orders right at that support level, absorbing all of that frantic selling pressure. The retail herd is essentially throwing their bags overboard, and the professionals are just calmly standing there with an open net.
Which perfectly bridges our metaphors from earlier. We said the market is a breathing organism. Well, what does it breathe? It breathes liquidity.
Okay, yeah.
And to get that liquidity, the market acts as a predator hunting the herd. Simon maps this out beautifully. He highlights exactly where the predator is looking right now.
The liquidity clusters.
Exactly. There is a massive, concentrated cluster of retail long position liquidations sitting right at the $74,000 mark. And just below that, an even denser pool of stop losses at $72,000.
You know, I'm looking at these liquidity pools at 72,000, and it just seems inherently unfair. Let's talk about the mechanics of why those pools even exist there in the first place.
Sure.
Because retail traders tend to anchor to round numbers, right? Or they put their stop loss just a fraction below the previous daily low.
Yeah, we are psychologically drawn to these very obvious levels.
Right, and it creates a massive mechanical magnet for algorithmic trading bots. But if smart money algorithms know exactly where our stop losses are sitting, how is a retail trader supposed to survive? Do you just, I don't know, turn off your stop losses entirely? Because we know that's just financial suicide.
Oh, you absolutely do not turn off your stop losses. That's how you blow up your account in a day. The way a Paradise Team professional survives is by changing where they place their invalidation points.
Changing where?
Yeah, the amateur places a stop loss based on how much money they're willing to lose, or at an arbitrary round number like $72,000.
Right, because it feels safe.
Exactly. But the professional places their stop loss at the exact level where their structural thesis, so their Elliott wave count, their baseline, is mathematically invalidated. That is usually far away from the arbitrary round numbers where the herd gathers.
Ah, that makes perfect sense. So if the market is a predator, it naturally sweeps down to 72,000 because that's where the oxygen is. It needs to trigger all those stop losses, liquidate the over-leveraged retail traders, and basically use their forced selling as the mechanical fuel to bounce back up.
Yes. It's an engineered exhale.
An engineered exhale. Wow.
Exactly. And this really highlights how professionals use the fear and greed index. The amateur uses it to validate their emotion. Like, if it says fear, they feel justified in panicking.
Right. They think, oh, everyone else is scared. I should be too.
Exactly. But a Paradise Team trader uses it to fade the emotion. They look for that magical number 20, and they cross-reference it with those liquidity clusters at 74K and 72K. They aren't joining the panic. They are anticipating exactly where the trap will spring.
They stay completely detached.
Completely detached, yeah. Just waiting for the smart money to absorb the sweep.
They realize the fear isn't a signal to run away. It's the data signature of an upcoming opportunity. But This leads us to a massive psychological wall. If we know the herd gets hunted this way, why do so many smart, capable people keep putting themselves in the herd to begin with?
That's the million-dollar question.
It really is. What is the underlying psychology that makes them so vulnerable to these sweeps?
It comes down to what we can really call the big short illusion.
Mm.
Most retail traders are operating under a deeply ingrained, almost cinematic fantasy of what trading is supposed to be.
Oh, absolutely. Everyone wants to be the solitary genius who predicts the exact, absolute top of a bull market.
Or catches the very bottom of a massive crash.
Yes, throwing 100x leverage on it to make millions in one heroic trade. It's all about ego and glory.
And that is a casino mentality. Simon directly compares this to playing roulette. When you try to pick an exact top or bottom with high leverage and you ignore market structure, you aren't trading. You are walking up to the table, taking your entire portfolio and putting it on red.
And look, you might get lucky. You might put it all on red, the wheel spins, and boom, it hits red. You make a fortune.
You feel like a financial god.
You do. But Simon makes a mathematically undeniable point here. If you try to make a living doing that, the law of probabilities will eventually bankrupt you. It is a statistical certainty.
100%.
Even highly capitalized hedge funds that operate with this all-or-nothing heroic mentality eventually hit a black swan event and just blow up.
Because roulette is purely a game of negative expected value, but it's wrapped in the illusion of control. Now, contrast that with the philosophy of MyCryptoParadise. Simon explicitly references the mindset from the book Think and Bets, which was written by a professional poker player. We aren't playing roulette. We are playing professional poker.
Okay, here's where it gets really interesting. Let's really drill into the mechanics of that poker mindset. When a professional poker player sits at a table, they aren't trying to win every single hand. That's impossible.
Right. No one wins every hand.
They are calculating the expected value, the exact probabilities of the hand they hold against the potential range of their opponent's hands. But more importantly, before they even glance at the potential pot, they calculate the risk. Simon says the very first question a master trader asks is, will I survive the worst-case scenario?
Survival. Capital protection is literally the foundation of everything the Paradise team does. A professional plays their edge.
Protect the chips?
Yeah, they only bet aggressively when the mathematical odds are heavily skewed in their favor and the downside is strictly capped. They rely on a system back-tested across multiple market cycles, not on a gut feeling or some lucky weekend.
I want to extend this poker analogy a bit because it perfectly exposes the human bias at the core of all this. Imagine a professional poker player gets dealt a terrible hand. The odds are garbage. What do?
They fold.
They fold. They toss the cards back. There is absolutely zero ego involved. They don't feel like a failure as a human being because they folded a 2 and a 7. But think about a crypto gambler.
Oh man, it's night and day.
It is. They tie their entire self-worth to a single trade. If they open a long position and the market structure breaks against them, their ego won't let them fold.
They just refuse to take the small planned loss.
Exactly. Instead of folding, they move their stop loss lower. They start bargaining with the market. They start praying. Because to them, taking a loss feels like a personal attack on their intelligence.
Yeah, and in behavioral science, we call this outcome bias. It's one of the most dangerous psychological traps in investing.
Outcome bias.
Yeah, when people have a gambling mindset, they judge the quality of their decision entirely by the outcome. If they execute a reckless, high-leverage trade against the trend, and, I don't know, Elon Musk tweets something that happens to save them and they make money, they think they are a genius.
Right, they get rewarded for being reckless.
Exactly. Their bad behavior is positively reinforced. Conversely, if they execute a highly disciplined, high-probability trade with perfect risk management, but variance hits and they take a small loss, they think they're an idiot.
They abandon a winning system because of one negative outcome. So if a professional doesn't judge themselves by the immediate outcome of a single trade, what do they judge themselves by?
By the flawless execution of their process. Simon highlights a reality that most crypto influencers just won't tell you. Professional trading is often incredibly boring.
Yes. It's not a Hollywood movie montage.
Not at all. It is the methodical, disciplined adherence to a system. It is waiting on the sidelines for days, ignoring the FOMO, until the data aligns and presents a high probability setup.
Just waiting for the right pitch.
Yeah, you manage the risk, you enter the trade, and you just let the probabilities play out. If that specific trade results in a loss, a professional doesn't flinch. They understand the math. An 80% win rate inherently means you are going to lose 20% of the time.
Right, it's baked in.
The loss isn't a failure, it is just statistical feedback. It's the cost of doing business.
Which is exactly why the Paradise team obsesses over capital preservation. You simply cannot execute a long-term mathematical edge if you've blown up your account playing zero-sum roulette.
Exactly.
Surviving those 20% statistical losses is the whole game. It really requires a complete rewrite of your internal programming. You have to actively unlearn the desperate human need for a dopamine hit from a lucky win and replace it with the quiet, unshakable confidence of a tested system.
And that quiet confidence is the ultimate dividing line between the predator and the herd. The herd is running on pure cortisol and dopamine. They are reacting to every single tick of the chart.
Up and down, up and down.
Yeah. But the professional is insulated by data. When Simon looks at that massive liquidity pool waiting to be swept at 74,000, he doesn't feel FOMO and he doesn't feel fear. He's simply observing the physics of the market.
Right.
He recognizes that the herd is trapped by their own cognitive biases, and he is patiently positioning himself to be the one providing liquidity when they panic, ensuring he is standing on solid mathematical ground when the trap springs.
It is truly a masterclass in emotional regulation. When you really absorb what Simon is doing with these charts, you realize something profound. The most volatile, dangerous asset in the world isn't Bitcoin, it's the human mind.
Oh, absolutely.
The market isn't a casino, it's a mirror. It just reflects our own internal chaos, our unmanaged fears, and our greedy impulses right back at us.
That is the core value of being part of the inner circle at MyCryptoParadise. It goes so far beyond just getting a technical signal on a chart. It is about adopting a comprehensive philosophy that actively protects you from yourself.
Protects you from your own worst instincts.
Exactly. Having a team of master traders means you have a constant anchoring force, reminding you to step back, look at the larger structural sequence, and execute with discipline.
And we want you to feel that security. The true path to wealth in this space isn't found in flashy, bet-it-all gambles that look good on social media. It's found in the disciplined, patient adherence to a system that prioritizes the protection of your hard-earned capital above everything else.
Absolutely.
We want you to feel supported by the Paradise team because we are navigating these chaotic waters together using a compass built on mathematical probabilities, not on blind hope.
And to truly lock in this mindset, I think we have to look at the specific way Simon closes out his tactical sessions. He uses a mental framework, a daily mantra, that perfectly encapsulates all the behavioral science we've unpacked today.
It really does.
It is the ultimate psychological armor against the casino mentality.
I completely agree. In fact, I'm going to read Simon's closing affirmation verbatim directly to you. I want you to listen closely and let these words overwrite whatever stress the market has been causing you, because this is the genuine inner monologue of a master trader.
Let's hear it.
Simon says, quote, "Thinking probabilities, not emotions. Losses are feedback that sharpen my strategy, and wins are the result of discipline execution. I detach from outcomes."
I detach from outcomes. That is the linchpin. Once you internalize that, you neutralize the fear. You neutralize the ego. And suddenly you can finally see the market's breeding for exactly what it is.
It is so incredibly powerful. You know, we started this deep dive talking about that terrifying, jagged EKG line on a medical monitor, the sheer panic that grips you when you don't understand the rhythm and think you're under attack.
Right.
But now, hopefully, you can look at that exact same screen and see the inhale and the exhale. You can see the structural baseline protecting you. You can see the exact price levels where the herd is about to panic, and you know exactly where the professionals are patiently waiting to catch them.
You've officially stepped off the casino floor and taken your seat at the poker table.
Exactly. And that leaves us with one final lingering thought for you to carry with you today. We've spent all this time unpacking how the crypto market acts as a brutal mirror, exposing our deepest human biases.
It really does.
It shows us exactly where we act out of fear, where we let our ego dictate our choices, and where we desperately gamble on a lucky outcome rather than doing the disciplined, boring work of playing the odds. So the question is, if trading is just a reflection of our baseline human behavior, where else in your life are you playing roulette, betting purely on hope and emotion when you should really be playing poker, patiently calculating the odds? Thank you for pulling up a chair in the VIP room with us today for this Bitcoin deep dive by MyCryptoParadise. We will see you next time.